few questions for the benefit of people who have missed the last hour and joined the class. So what we are going to do today is to discuss some of the questions, and through that to make sure that we have covered all uh, the parts which I mean to get more deep understanding on things, and how do we select the best answer out of the given choices. So we'll do it at we'll start as we discuss from chapter 5, because that's the latest one that we have done, and then we will do others, and also we'll have some mini quizzes. Have you got any mini quizzes on the system? Not yet, right? We will put it on after this this week, or within this week. We put some questions where you can go and do it, or not, can
No,
you?
no, no. Prasanna, we already did for several.
Oh,
I
did you?
mean, yeah, yeah.
Ah, lovely. Okay. So, how many have you done? How many are there?
For the even up to chapter 5, we have done
You're done.
two times. Only for chapter 5, we have done once. Chapter 5 one, but the
Okay.
others we have done two times.
All right. Lovely. Okay. So two times the same thing, or two different
No, no,
ones?
different ones.
Two different ones, eh? All right,
Yeah.
right. So that's good. And okay, Himali, uh, Himalaya online.
අද හිමාලි නෑ මේ උපේක්ෂා මම
උපේක්ෂා
Yes, sir.
හිමාලයට කියනවාද මට පොඩ්ඩක් එක ස්කෝස් ටික එවන්න කියලා. මිනි ක්විසස් කරපේ ටිකේ.
chapter 5 ද sir
නෑ දැන් අනිත් chapters වලත් කරලා තියෙනවානේ. මට පොඩ්ඩක් ඒ ටික
ඔව් sir
නෑ හදිසි නෑ. මට පස්සේ එවන්න. මට පොඩ්ඩක්
right okay sir okay
හරි?
okay
Okay. All right. Thank you. All right. So in that case, I don't know whether these questions are then repeated in that as well. But so by any chance, if there are easy ones which have which everyone has got the right answers, let's pass them, and then we'll pick up ones where there are answers which everyone is not agreeing on. So then we can understand what are the areas that we need to revisit, or we need to look at again. And can we go like that? Okay, just to see that with you have had a chance of answering these questions, or even if you can't remember, just answer that. That's easier, so that we can discuss them. Can any of you remember whether you have seen this question before? Share this. Let me check. You can see my screen, right?
Yes.
Oh, okay. All right. I think everyone has answered. You don't have that many people in the class, don't you? So all of you have answered the right answer. What is meant by two-tier corporate structures, where the management board manages the company's business operations, but is accountable to supervise by a supervisory board elected by the shareholders. So it's two tiers of the board structure, executive as well as non-executive with that. Okay, right. Others? Right. That's right. It's the compliance risk. That's the basic of it. So it's a risk of compliance. Oh, here you go. I have 4 people in the class. Why am I always getting only 3 people answering? Is there anyone who can't see the polling option? Rasika, are you answering?
Yes.
Okay, Rasika is oh, okay, I got answer. So, okay, fine. I just want to check whether anyone has a issue. Right, you're on track, so that's fine. So you can answer this because these are about using the terminologies and not exactly remembering what you. I mean, sometimes you might not need to exactly remember what the BIS definition is, but you need to have an understanding of what it is. But in this kind of simple 4 answers, we can find out, but it might not be the case in the exam. It'll be more complicated than this. Okay, next question. This you should be able to do it now. Yes, correct. These questions you need to save your time. Wrong. Right. I always don't get the fourth answer. This is basically the definition of operational risk. The risk of loss arising from process, people, systems, or external event is an operational risk. So as soon as you see it, it should be your answer. And systemic risk is totally different one. And if you have got confused between these two, best thing is for you to go back to the basics. Don't worry about it. It's not a major loss than that you have answered the wrong one. But just go back to the basics and check the definitions of these risks. So it's very important that we understand systemic risk is a risk of the full macro system. So it can create by collapse of one institute, which will have a snowball impact on the other ones. So it's a breakage of the system. So that's why it's called systematic risk. So it's not systematic risk that you're talking about here. The risk of loss arising is a loss arising from process, people, systems, and external event is a definition of operational risk, right? So it's not systematic risk, it's not systemic risk, it's not business risk, it's not business risk, because business risk is arising out of the competitors business and how you what your industry is going through. But this is about operational risk, process, people, systems, and external event is the definition of it. So make sure that you go back to the basics and check it on that. So those are the good checkpoints. Yeah. Ooh, 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 ooh. Can I relaunch for you to answer back again? Read the question. Now, when I ask you to read the question, don't take 5 minutes to answer. Now, put your new answer. Right. Now it's fine. I got all four answers on this one. So you need to carefully read the question and answer. Just because the question is small doesn't mean that you can just answer by looking at it. But when you read, just read the whole sentence. That's very important. Which one of the following? Which one of the following department focus primarily on ensuring all the rules and regulations are followed? So this ensuring all the records are followed. It's not audit. Audit is checking whether that is being done or not, right? It's a post-mortem exercise. So legal department is looking at what? Legal risk, not all rules and regulations. Risk department, yeah, it might be, but basically it looks at even beyond the compliance. So it looks at the risk of the organization. So focus primarily on ensuring all rules and regulations are followed. So rules and regulations basically comes under the scope of compliance. So that's where you need to select the right answer. Please read the question. Actually, you have the knowledge. So what I'm trying to do is to tell you how to do it in the exam without making any blunders. This is much of a theoretical answer, which will have to go back to your text. Awaiting answers from the other three people. Is the match still going on or is it done?
It's done.
Fine, it's done. What happened?
New Zealand got 167.
Ah, okay. So we are yet to bat, right?
Yeah, we have to chase.
Ah, okay. Multitasking, Rasika. You're watching the match as well. Right. Correct. That's right. Contrary to Europe. So these kind of questions will need specifically to study the textbook, which I'm bad in, but you need to be good in. Read the question. If you read the question, you can pick the answer fast. Yeah, right. On these set of questions, I'm training you not on the knowledge, training you on how to select the answers, and we'll actually go into the actual exam questions in a bit.
This was a question that was there in the test.
Okay. These questions, like we have about 1,000 questions, so it's getting rotated in all the question papers, and also exam also the same. Like they will have about thousands of questions and randomly pick questions for your paper. This is not a question actually to put in on exam. If I am the examiner, I wouldn't put it. Ah. Uh-oh. As this fifth third person. Oh no, we have eight. We have 6 people in the class. 5. There's a 6th one. Match is over. Concentrate on this, please. Okay, I'm not getting that answer. Right. So organization which isolated group of people works report to a linear functional manager is known as. Can you remember the structures that we discussed about? So we discussed about the structures where they have separate hierarchies for separate departments or geographical locations or anything like that. So those are we call silo structures. They are dependent on their own structure. They may have repeated functions in all of these structures. For example, compliance function may be repeated as individual functions in these 3 or 4 departments or geographical locations. So that is called silo structure. So it's not talking to each other on department. If you take compliance, it might not talk to each other on the or there's no structure reporting on the functional reporting of the in the structure. That'll report to line management. So it's linear. So therefore it's called a silo structure. Layered management is not an answer for this one. Layered management is like you have layers, so which in any organization you will have that, but this is not an incident of isolated group of workers report to line manager. We call it silo structure. Matrix structure is where you have cross reporting to different managers. You may have two or more managers or reporting of your work to different lines, which if you are on a multinational environment, you will always have your regional reporting and your country reporting and all that things. And also you will have department reporting as well as your functional reporting in somewhere else. So these are the matrix structures, which is common in today's context because of the complexity and limitation of the resources. And decentralized structures is a different structure, so it's not about isolated group of workers reporting to one line. So if it's isolated group of people reporting to one line, please, uh, if you are not too sure, please look at the pictures which were in I can remember that was in the slides also. If not, for sure it's in the book. Otherwise, just check on the organization structures and remember the pictures. That's the easiest thing to do. General knowledge. Right. Yeah, it's a rare chance of getting this wrong. So answer is three. C, staff publishing competition with others. All technological risk is external, competitive risk is internal, social and market risk is external. So that's all I like that. Quick answer. 2 seconds. Click the button. Ah, mm, I don't think. I mean, C is not an answer here. But if you have by any chance not read the question properly on this one, risk appetite is also known as, so it's another name for risk appetite. That's how much of risk that you would like to remain with you, or what level of risk that you can keep, what level of risk that you need to um, uh, mitigate is your risk appetite. How much of risk that you would like to keep, what's the level of risk that you can tolerate. So the answer should be D, the risk tolerance. Risk aversion is you do not want to take that risk, so you avoid that risk. For example, if you don't want to have a credit risk, you don't lend to people. You just only take deposits. Like some time ago, NSB, they didn't want to take the risk, so they not now. So that's kind of environment. Like some banks are only taking deposits, so that's because they don't want to go for credit risk. And risk awareness is knowing about risk neutrality is it's about neutral about the risk. So but the answer should be risk tolerance and risk appetite all refer to the same thing. Correct. These are day-to-day stuff, right? We are going through. We need to select the best possible answer on this one. So answer for this one is due diligence. And the definition of due diligence is a care reasonable person should take before entering into an agreement or transaction with another party. So that's about including everything you analyze, you look at your risk and how well it fit onto your risk appetite. So all these things come with the due diligence, and you need to know about that party's details as much as your risk tolerance levels are. So pre-agreement analysis is a part of work that is being done, which I don't think is wrong, but it's not the right answer, the best answer here, because in banking and finance terminology, what we use is due diligence for this one. And you know that you have so many other checks, and different institutes have their own due diligence checks levels, methods, and also there may be underlying systems which are running even after becoming the customer. So these are due diligence work that is mandatory for you to do because of your risk tolerance levels. So pre-agreement analysis is not an answer on this one. So it should be due diligence, because the above is a definition of due diligence basically. I don't agree with this question, but you can answer. This is a difficult question to answer. I know that this the answer that it's given is matrix structure as the right answer by the examiner, or rather the question maker on this one. uh, I'm not in agreement with it, so I don't think it's right. Do you think any reasonability of taking matrix structure as the answer for this one?
Prasant, the second diagram given under the metric structure, I think there they talk about the dilution.
Is it?
Yes, of accountability. I
Ah.
think that's why, because the book
That's
talks
why.
only about two structures, no?
Right, yes.
The second the
Silent.
diagram of the matrix talks about that.
Right. So it says dilution of the
Yes.
accountability, right? Okay. Okay. Then we need to remember that our agreement is not going to work on this one, whether we agree or not. If book says that, so make sure that you remember this. I might not answer this question right, even if it comes in the exam for me. because what I understand is matrix structure is not, if that matrix structure is diluting the accountability of compliance staff, most of the multinational compliance work should have been already diluted, which is not the case. I think this is, I don't agree with the answer, but if the answer is that, please remember that it should be matrix structure if they talk about dilution of the accountability of compliance staff. Okay, for the exam purposes. But in actual sense, there is no room for this when you actually live in that kind of structure.
Yeah, but in the book it says, however, firms also must be careful to ensure that the implementation of metric structures does not dilute staff accountability and clarity in the roles that each person fulfills.
Oh, okay, okay. So which means that they think there's a risk. So actually, practically, the implementation that we have seen has addressed that risk. So that's why we don't see a risk. We don't even feel a risk of matrix structure on it.
Yeah, but when it comes to silo, you have a risk. I mean,
I know
you have a
that
confusion.
I know because they don't know what each other is doing, right? So
Yeah,
it's that's why I told you. I don't agree with this question and the answers. But our agreement doesn't count. It's what book says for the exam purpose. It's matrix structure. Let's not get it complicated. I know that all these structure, even silo matrix, we wouldn't keep any room for uh, accountability dilution, right? But I think what it says is greater risk is there for accountability in terms of matrix structure. They must be talking about very loose matrix structures where you are reporting to two different areas and proper responsibilities are not given. So by in matrix structures that we experience in practical world is not like that. They may be theoretically talking about it. Sometimes these examiners and people might, depending on their experience or depending on their bad experiences that they had earlier or have seen it in medium organizations, might be coming up on this. But let's remember that as the right answer. Matrix structure.
Prasanna, the silo structures, they say the accountability of each person might be increased as they are responsible for delivering their specific function, though the overall structure must be robust to deliver group cohesion and cost control.
Yeah, because what they mean by that is silo structures. You have direct reporting. You are responsible for this division, so therefore you must be having better control over it. And
I think
matrix
based on
structure.
those, they must be like going for metrics.
Yeah, I think so. Isn't not what we see in the matrix structures in practical world, but theoretically they may be doing it. They may be concluding it as high risk of matrix structures. So these are things like we can't logically arrive at the answer. We need to give the answer what book says. So let's go by the book on this one, though we don't practically agree on that. Right? Agreed. So this is why it is important for us to look at the book as well as be in the class. So we don't have even half the people in the class. They're missing on these discussions. Quick general knowledge answers. You don't have to wait even a minute to answer this. Very important to spend the time on reading the question. Which of the following would be classified as internal source of business risk? Uh, so you need to read the stressing words here is internal and business risk, right? If it look at which one is internal here is very clear. Social changes is external, environmental one, and change the law is again external. Regulatory initiatives, not you put regulatory initiative, it's about by the regulator, so that's also external. And lack of responses to changes in the business environment, that's if you don't uh, change or the respond to the changes in the environment, you will go off the business. So that's a business risk. It's not anything else. So therefore, answer should be D, and this is the only internal one, and that's the business risk as well. So it's very clear because you don't have two internal risk sources listed here. And if that was the case, you should be able to look at the business risk as well, whether that's a business risk or whether that's a credit risk, whether there's any other risk. But basically business risk is little broader on this answer. The lack of responses changes in business environment. So answer is D. Why are you taking so long to answer this? The risk score is a prediction. It's not something that you can always experience and check. Because, for example, uh, risk of a cyber attack. Can you wait until 5, 6 cyber attacks comes onto your system to assess that? No, right? So therefore, it can't be number of occurrences and impact score, because number of occurrences is something what we cannot wait for. What we do is we check what's the likelihood of something happening, whether the likelihood is high or likelihood is low. So you can give a number to it. And if that likelihood actually materialize, what's going to be the impact? Whether the impact is high, low, or in between. So that is where you are calculating the external risk, uh, even whatever is what, which one of the following is formula used to calculate the risk, or is likelihood into the impact. So likelihood is how likely it is happening, and if it happens, what's the impact. So that's the formula that we're using. And number of occurrences is like post-mortem activity, which is not something what we are looking at, because number of occurrences, sometimes if the impact is high, even one number of occurrence will wash off your business. One cyber attack impact score is really high and you're gone out of business. That's not what you're looking at. What's the likelihood even getting one, whether it's high or low? So that's a impact score into likelihood. So that's a formula for that one. And please look at the basics on that. Again, a basic. Basel Committee, Basel regulations. Mhm. Others answers, please. Two more people to answer. I think we have a confusion here. So we need to get to the Basel Committee's basic objectives. What is Basel Committee? What can they do? And it runs into another discussion of, can you remember the things that I told you, like how what's the jurisdiction of certain institutes and how far they can put laws or regulations or govern other countries. When it comes to international community, though, the countries, no one is under anyone. So therefore, an institute which is outside your country can't forcefully come and implement anything in your country. Not even another country can come and do anything. So that's why you might have seen that this is apart from what we're discussing in the subject area, but you might have seen in terms of explaining you what's the power of a country. So can you remember this Human Rights Council and the countries were talking big about it, and then our leaders were telling that, okay, I'm ready to go to the electric chair and all that things. But looking at the actual scenarios, those Human Rights Commission or any other country cannot implement without the consent of the country on any of the laws. So basically, we have not signed up that convention. So that's why our leaders were like, lions talking about I'm going to the electric chair and all that. If we have signed up that, they would have already been in some chair, but we have not signed up those agreements. So therefore, no one can implement it against us, simply because the country is independent. We call sovereign nations, and therefore no one else can come and implement laws just because they want in your country without your consent, without you signing up for that treaties. So likewise, even the Basel Committee is not an authority for other countries' regulators or uh, the banking players. What they can do is basically provide guidance. So when they provide guidance, whom are they providing guidance is the subject matter on this one. Are they providing guidance to the banks, or are they providing guidance to the supervisors or other regulators? They are providing guidance actually to the supervisors or the regulators of the financial system, and provide the answer D. If you, one second. Sorry about it. So uh, this is the Basel Committee's job, is to provide guidance to the banking supervisors. So the right answer on this one should be guiding bank supervisors towards adoption of sound corporate governance practices in their own countries is the best answer over here, because if you take the last one, D, provide outline legislation, that's not a role of Basel Committee. They are not outline the legislation. for the adoption of sound corporate governance practices in member countries, because they are not dealing with the governments, they are dealing with the regulators. Basel Committee, if Basel, Basel 2, Basel 3, and all these things, if we as a country do not want to go through, or if our regulator doesn't want to implement it, they can stay without implementing it. But what Basel Committee does is to guide the regulators to do that. So therefore, it's not outlined in the legislations. Legislations has to be outlined or made by the regulator. Basically, regulators don't make legislations on that. Regulators will issue the regulatory guidelines or regulatory regulations. And answer C is guide legislators towards. Now, Basel Committee is not guiding legislatures. Basel Committee is not going to the country's parliaments to advise them. It's about the banking regulators. So therefore, Basel committees, what you need to understand is Basel committees guidelines are for the regulators or the supervisors. So they are the ones who will implement rules, regulations, or anything what they need to implement inside the country. So therefore, the right answer should be B. It's not D because it's not outlining legislation. It's not C because it's not guiding the legislators. So answer is B, guiding the banking supervisors towards the adoption of sound corporate governance practices in their countries for the betterment of secured financial sector in the country. Are we agreeing, or do we have any different answers? Yeah, got it,
Agreed.
right?
Yeah, it's clear.
Yeah, all right. Let's move on to this one. So please remember that wording because it's about the supervisors or the regulators, not the legislators. Do you know the difference between regulator and legislator? Legislators, we generally call the parliament or the people who are making laws. The parliament is a the legislative enforcement authority in our country, and in any country basically. So they are the ones who are responsible for making laws. But regulators or the supervisors can make regulations, not laws. Okay, the central bank is issuing regulations because you've been regulated by central bank. Your financial services are being regulated by central bank. So they are issuing license. So they can retract your license, withdraw your license. So therefore, they are the regulators. It's not law. It's regulations. So vital to the corporate governance process is basically the answer should be C. Um, Compliance function is not the only one, and it's not only internal auditors because it's about governance, corporate governance. So corporate governance is basically in layman's language being a better corporate citizen. So how do you make sure that the firm's corporate governance process is working right? Is compliance function looking at regulations and laws and whether you're complying with it and ensuring that compliance. Internal auditors are checking whether you have ensured that. External auditors are checking both whether the internal audit and the compliance and all other functions are properly following the governance process and giving the true and fair view of what you're doing. So external auditors are not always external financial auditors. There are so many other auditing is also happening. So therefore, it's the answer should be C, and that answer B is not the right one. So answer C is the one that you need to take as the answer for this. These are very tricky questions. Yeah, very tricky, right? So this the answer should be principle 10. So people who have arrived at answer as 10, can you tell me more? How did you do that? What's the method that we can use? That's very difficult, right? So that's those questions you will have to live with, and it's very difficult to exactly find the methodology on this. But the answer is principle 10, and make sure that you go through them more often, so you actually have some idea. Okay, it is top, bottom, or middle, where it was. Uh, those are the questions I wouldn't spend much time if I can't remember. I would just do a reasonable check and put the answer and move on. Don't get stuck in questions don't spend a lot of time on questions because there may be more SE questions coming up in the next question if you move on. Otherwise, you'll be just spending your time and later on you will be panicking at the end. You have 20 questions to answer where you will have about 10 minutes, which you can't do. So please make sure your time is used effectively. Okay, this one. So okay, golden principle. Risk is a wider function. So the compliance is part of the risk, and risk is not a part of compliance. Risk is wide, more broader function, and compliance is part of a risk function. Um, in practice, you might have a complication in understanding what we are discussing here because your compliance function and risk functions are functioning independently. But this is not talking about how practically we are handling it. So compliance is part of the risk function. So your organization might have decided to keep compliance risk separately and other risk or the overall risk function separately, but it is also a part of a risk when you take the organization as a whole. So if you look at the risk, uh, the committee of directors, they will look at the compliance as well as the other part of the risks. So the answer should be B. Compliance is part of a risk function, and risk is not a part of a compliance function because risk is more wider. Risk includes compliance, business, operational, everything. Mm. Okay, what's the right answer on this? Take answer D. Does it match the due diligence? To collect sufficient data on financial products that are offered to ensure suitability on and reduce fraud. Due diligence is about what? We discussed earlier also. Due diligence is about the check that you're doing of the the other party or reasonable person would do the background check before getting into a transaction. So it's about not about the data on financial products, it's about the other party that you're getting into a contract. So in that definition, the if you look at the other answers, answer C, if you look at to provide a regulatory investigation that bank systems and controls are fit for the purpose, it is not. It's a regulatory audit. To collect sufficient data on banks customers to ensure that they are creditworthy and suitable, it's part of it, but the best suitable answer is to prevent unnecessary harm to either party in a transaction. What is the key reason? It's asked the reason. It's not about the process, it's asked about the reason for having the due diligence. So answer B tells about what due diligence is: to collect sufficient data on a bank customers to ensure that they are creditworthy and all that. That is not the reason. The reason for due diligence is much broader because it talks about due diligence, not about giving a credit. Due diligence is to be done even if you're opening up a savings account or even if you're getting a deposit from the customer. So to prevent unnecessary harm to either party in the transaction is the right answer. The answer should be A. Why not B is it's not about collecting data. It asks about the reason to have it, due diligence. Why? Because subsequently, before transaction, why we do that is because after transaction, we may have repercussion. For example, if someone brings millions of money and if you don't do the due diligence properly before you accept in the deposit, it may be black money that you're taking into the banking system. You may be unknowingly be a part of the uh, the uh, money laundering chain, and you will be fined by the regulators once they find it, and you will have so much of issues that you will have to deal with. So that is to prevent unnecessary harm to either party. And if you take the answer B, it talks about only uh, the credit worthiness of and the credit worthy and suitable to get the customer in. It is not the right answer. The reason for it is to avoid any unnecessary harm to either party of this transaction. We discussed earlier about one type of boards, and this is the next type. Okay, yeah. Okay, so we need to go through the definition of what it means. So we were discussing about unitary board and dual boards. So basically, unitary board is where both parties, or rather, there's one board structure, and where they will distribute their responsibilities in terms of supervising and daily management. And the board of director that consists of supervisory board and an executive board is called dual board structure. So it's like executive and non-executive directors properly divided into as a dual board is what we meant by the dual board. So the answer is B, dual board. Unitary board is like both are in same board, and that it's totally opposite of what it is defined here. So make sure that you go to the basic on the boards. Fine. So now let's try to okay. Let's look at some of the actual exam questions. So these are actual exam questions. You can see the exam. So this is how you will see the exam screen. You have to sign in and you will start on the answering, and you will see the questions below. Which question it is will be highlighted here, and you will have to keep on doing all questions. So let's try to do a few of these. Again, about due diligence. Yeah, you can see the same answer that you can find here as well. You can't go wrong in this one, right? We discussed about a minute ago. Again, it asks for the purpose of due diligence. Purpose of due diligence. So right, so the answer is D, to prevent unnecessary harm to either party. Can I have the answers of others also, please? So it will be effective discussion. Right, you're right. The answer is 4. So what is meant by two-tier corporate governance structure? We discussed this a few minutes ago, where the management board manages the company's business operations, but it is accountable to this and supervised by the supervisory board elected by the shareholders. So supervisory board and the management board, that's a dual structure, two-tier structure, corporate governance structure. So then that is the meaning of the two-tier corporate structure. Mhm. All right, let's look at it. How risk managers approach the risk and uncertainty and seek to differentiate them. Answer A, there's no effective difference between the risk and uncertainty, which is wrong. We know the risk and uncertainty, right? Uncertainty is where we don't have data, we don't have information about it. We took the risk, we took the example of COVID-19 pandemic. We didn't have data, we didn't know what's going to happen. That's uncertain. But now we know if what happens. And tsunami, it was uncertain. We never have heard of it other than that Kawantisa time where the sea has come into the country. Other than that, we have not heard anything about it. We never expected that. It's uncertainty. We never knew about something like that. So, but when we know about it, yeah, now we know. Now it's a risk. Now we know what are the components of risk. If something happens in the sea, and this is how it happens, this is the magnitude of it, and this is the distance that it can travel, and so on and so forth. So then at that time, we know we can take mitigative action. So for the risk, you can take mitigative actions or accept the risk. But uncertainty, we basically don't know anything. So therefore, there's a big difference between that. Risk is regarded as a near-term identifiable event, uncertainty as a long-term event that cannot easily be identified, which doesn't have a long-term or short-term, right? Because risk is not a near-term and uncertainty is not a long-term. Uncertainty can happen anytime, so it's not long-term. We don't know about it actually. It's not about long-term or short-term. We don't know about it, what can happen tomorrow. So therefore, that answer is horrible. So that answer is not something right. The risk is regarded as near term. It's not near term. Risk can be long term, right? So long term risk, short term risk, yes, assess all and identifiable events, which is right, identifiable event, and answer as a long term event, which is not right. It's not long term and cannot be easily identified. It's not about identified. It's we don't know. We don't have data about it. And risk managers would use mixture of own experience and probability of the scenarios actually occurring is right, but that's not the answer for this one, right? Risk managers would use mixture of own experience, yes, because we predict, and probability of what will happen, of the scenarios actually occurring in the future. That's about risk only. Risk and uncertainty, and seek differentiate them. So it doesn't define the answer for the question. And answer D is scenario with amounts of quantifiable data can be classified as risk, and if unquantifiable, it is classified as uncertainty. Is it matching with the definition? The scenario with amount of quantifiable data can be classified as risk because we know that, okay, what's the impact, what's the magnitude, what's the possibility of having a tsunami if that magnitude of something happened in Sumatra or somewhere, and we have the data about it, we can reasonably predict what's the impact and take mitigative actions. But unquantifiable, if we don't know what is happening, uh, uh, some asteroid tomorrow comes and hits without even NASA or anyone knows about it, it's an uncertainty, we don't know about it. So therefore it's not classified anywhere, we don't have data, what will happen, will it actually make a disastrous result, or whether that just that destroy the area that is subject to that asteroid, we don't know about it. So that's uncertainty, and the risk is where you can reasonably assess because you have the data. Quantifiable does not mean numbers, but it can reasonably assess certain level of quantity or what can happen. So answer basically is answer D, because other answers are not matching the question. If you read the question back again, how would risk managers approach risk and uncertainty and seek to differentiate them? How do you differentiate them? Answer C, if you take, the risk managers would use mixture of own experience and probability of scenarios actually occurring. So that's about risk score. How do they get into the risk score? That defines that, but it doesn't define how differentiate it from the uncertainty. But clear definition is given on the D. A scenario with amounts of quantifiable data can be classified as risk. If unquantifiable, which means you don't know, it is classified as uncertainty. Anything that we need to discuss more to understand it better? Or have I confused you on this? Are we okay with? Sure.
Yeah.
Yes, it's compliance risk. We discussed similar kind of question earlier also. Oh, okay. What are pistol factors? What does pistol stands for? What does pistol stands for?
Political, economical, social, technological, legal, and environmental.
Excellent. So then, what does that sound like? That's all external macroeconomic environment, right? So political, environmental, social, technological, legal. So these all are not within the company. So it's not the answer A to analyze the internal macroeconomic environment. Sorry, microeconomic environment. It's about analyze the external macroeconomic environment. Is PESTEL factors where you use for environmental analysis. What are the favorable and unfavorable things in your environment in terms of your business? So PESTEL factors, the answer is D. We did this question earlier also, similar thing. and others also select your answers. I can't see who's answering what, so but it'll help you to see which answer you would pick and as against our discussion. So that's easier for all of us to align ourselves. Yep, your answer is right. Answer C. The risk of legal or regulatory sanctions, material functions, financial losses, or reputation loss due to compliance failure is defined as BI is defined as compliance risk. Right. Correct. He's asking about compliance department. Primary focus. Primary focus. Yeah, you're right. So ensure the rules and regulations are followed is compliance. Basically, what it means is compliance is you have set of regulations, whether you're actually matching them. So that's the primary function of that one. But in addition to do that, you must be doing other things, ensure that the risk models are tested and all that, and ensure the risks are understood, and you will have training and all these things being done. But that's not your primary focus. Primary focus has to be the rules and regulations are followed or not. That's what you have to look for. I told you earlier also, this you can't spend more than few seconds on this kind of questions. Answers should be selected in a flash of a second, because what it gives is a definition of something. You should be thorough with the definitions. You should know about them properly. See, there's a little confusion here. The Bank of International Settlements, BIS, defines which one of the following as a risk of loss arising. Forget about BIS. Risk of loss arising from process, people, systems, and external event. It's the definition of operational risk, not the systemic risk. Systemic risk is actually the financial system, for example, the banking system in Sri Lanka, or financial sector, the risk in Sri Lanka. So that's a systemic risk. It's about if a bank collapse, one bank collapse, they may have a systemic risk, because then the other banks, people will not trust the other banks also that can fall, so that they will start withdrawing money from them, and then the liquidity issues, and then they will collapse because they can't meet the liquidity demand. So like that, that is a systemic risk. What we are talking about here is not the systemic risk, the risk of loss arising from process, people, systems, and external event, which is on your operation. Like when you do the operation, there may be errors happening, there may be mistake that by the officer who's doing the transactions, and has given on for 10,000 you're giving 100,000, so that's a risk. And in terms of transferring 5,000 rupees, instead of selecting LKR, selected USD 5,000, so that's a risk. So it's about the people, and sometimes the processes have a risk. and sometimes the systems might not work properly, and your ATM might just throw cash out without um, proper limitation, so that it might just send out the cash of some other customers or maybe bank cash. So external event also can result in operational risk, because there may be some riots or something happening over there, and then you will have operational risk on that. So it's all operational risk. This is the definition of operational risk. It's not systemic risk. uh, we need to be thorough about the definitions of these words, because otherwise we will be just losing marks for no reason on this. What is this? The use of scenarios to discuss key governance and regulatory challenges can be effective method of doing what? Risk management, training staff, assessing compliance, or audit. I can see we have 7 people. I never saw 7 people answering questions. What happened to the other 2? Can you also answer, please? It's for your own good, because if you just think, okay, I'll answer this one. Then when we discuss the answer, fine, that should be the answer. That's not going to work. You select the answer, and then psychologically you're ready to correct yourself after that. If you don't select, if you just look at this and listen, um, why would I ask you to do this then? We have a complication here. To use scenarios to discuss, like I'm taking a scenario of a customer who has borrowed money from us, and the discuss key scenarios to discuss the key governance and regulatory challenges can be effective methods of training what? So I'm lending a customer without doing my due diligence. I'm taking that examples. Okay, we have not looked at this customer. We have looked at only his business, the current business. We have visited them and we have checked it. Actually, that happened once, because we were to give a lease of a vehicle when I was at NTB, because at the initiation of Nations Leasing. So we sent the credit officer. He came and told me that, okay, fine, he has a big business like this and they have vehicles and all these things, so it's all right to give a vehicle to them. And our management also approved, and it was a good credit paper, so we approved and given it to him. And then about 2 months later, he was asking for the second vehicle and saying that the operations are going on and his banking transactions are fine and everything is all right to give a second vehicle. And the credit officer again went, checked, gave me the credit paper, and I wasn't happy about it, because I didn't want to give another one at the initial stage. Like, our portfolio was small to have a risk of individual businessman. who's doing this business, that it will be an impact to the portfolio. And at that time, I had some kind of suspicion this can go wrong, and I said we should not be giving it at this time. And the corporate management was really harsh on me and asked, we are trying to lend this, and it's a good credit paper. Why do you want to do that? I said I don't like it. And no, you sign it and send it. I said I can sign. I'll say that I am not for this one. If you want, you can approve it, because my approval, I'm not approving authority. I wrote it and give it. They approved it. Luckily, before giving the vehicle, we realized that it is LTT scam. They take the vehicles by showing all the businesses and taking all the vehicles to the other side of the country where we'll never see them. So that one vehicle which was given earlier is already gone. We never recovered it. The second vehicle, luckily, because I was dragging it, it stopped there. So that's a method of like this. These are training scenarios, right? So basically, what we can look at in analyzing and discussing the key governance and regulatory challenges like that, it is for training, because it's experience which can train someone. It's not the theory. So if you have not done a proper due diligence on someone, and that is also not impacting, it will impact both sides. So the use of scenarios to discuss key governance and regulatory challenges can be effective method of training staff. It's not about assessing compliance, because you can't discuss the key governance scenarios like that to assess the compliance. It's not audit, because audit is not going to discuss it. They need to based on the evidence. So evidence is not the one that we're talking about. We discuss the governance and risk management. It's not to discuss the scenarios to risk management. It is helping somewhere, but it is about risk management training. So basically it is about training. Regulatory challenges can be effective methods. Discussing the scenarios will be effective method only when it comes to training, not about risk asset management, assessing compliance or audit. So we discuss about how effective trainings can be, how trainings can be arranged, and what are effective methods of training. So we discuss under that, discussing the scenarios. So if a question comes like that, it has to be training, because the use of scenarios to discuss key governance and regulatory challenges can be effective methods of training. So the answer should be B. So which one of the following departments focus primarily on ensuring that all rules and regulations are followed? Primarily ensuring that all regulations, rules and regulations are followed. Right. Can others also select the answers, please? It's easier for all of us to discuss it. We discuss similar thing. Legal department is looking at legal risk management department is more broader in terms of this, but specifically which one of the following department focus primarily on ensuring the rules and regulations? The best answer is compliance department, because that's where the rules and regulations are being looked at. The Boston Committee on Banking Supervision advocate adopting which one of the following organizations principles in relating to compensation policies? All right. What's World Bank doing with this? There's nothing to do with World Bank because World Bank or IMF is not talking about compensation. They are too big to talk about that. And what is the Financial Action Task Force? No, Basel Committee is not talking about anything like that. Basel Committee is talking about FSB. Wolfberg Group, no. So Basel Committee on Banking Supervision advocates adoption. Which one of the following organizations' principles in related to compensation policies? That's FSB. A should be the answer for this one. World Bank is too big and it's nothing to do with, and we have never discussed anything in relation to Basel Committee on the World Bank. Financial Action Task Force is nothing to do with this one, so that's not a part of the accepted things on the Basel Committee. So Basel Committee basically provide the guidance to the supervisors, financial supervisors of the countries, and about compensation policies, they ask you to follow the FSB, Financial Stability Board guidelines. We did this question earlier. Just answer it in flash of a second. Is it taking that long for you to select an answer when you know the answer? This is theory. It's answer B. Continental Europe is the answer. We discussed this type of structures a few minutes before. One has answered even before reading the question, and that answer is wrong. Are you reading the question? Don't try to be unnecessarily fast in answering question. And when you have a question that you need to read the parts, these commas, full stops give some meaning. So you need to look at them and give proper punctuation stops when you're reading. Otherwise, you will go wrong. All right. Can you write down a task for you guys? Please revisit the structures. I can't afford you missing marks on this. Because in a business structure, where compliance officers are appointed to business units, report to the business heads, while at the same time remaining under general supervision of group compliance. This type of structure is known as matrix structure. You have a different departments, but you have underlined compliance department there, and you are pointing from compliance department. This officer is looking at retail credit risk. Sorry, retail area. This officer is looking at the wholesale area. This officer is looking at the corporate area, and the other officer is looking at the general operation areas. So these are all being reported to the head of compliance, and that's the department's functional structure. And you will have reporting managers of these divisions who will be uh, handling the day-to-day operations of that vertical. So you'll be more specialized in with that vertical, and you'll be having your responsibility towards that SBU or that head of that vertical. But you will always report back to your compliance department. So this is a matrix structure. You will have two reporting managers. One may be functional and the other one may be a structural. So, or the entity, right? Any questions on this? Anything which confused you on this question? How did you think? Just speak so that we can resolve it, because I saw it in many places you going wrong with this matrix structure. What confuses you? Or mixed structure, there's no name like that. So supervisor structure, there are no structure names like that. So basically use solo structure and matrix structure that you're talking about. And solo structure where you will have compliance does not report to anywhere else. You will have your CEO of that line and your compliance will be there. But if you take the matrix structure, you have department head of compliance, and they will be assigned to different businesses where they will have their own, like maybe different businesses or different countries, like your regional head of compliance, and you will have different countries will have anything. So that matrix structure, you're reporting regionally to the regional head of compliance, but in the country you will be reporting to either the directors or the CEO or someone. Are we clear on the structures? Yeah, you're not clear on the structures. So what you need to do is you should go back, and if book is not clear, because this is very simple thing, I don't want you to lose any marks on these structures, any marks on this one. You can't have absolutely zero tolerance on this one. So if what I'm telling is not making sense to you, which can be, please watch some of the videos on the structures, matrix structure and solo structure. Just type on YouTube matrix structure and solo, matrix versus solo. So in 2 or 3 minutes, you'll be fine with it. Please write down. I saw that you're going wrong in many instances. Please write it down and do it just after the class or while you're on the go or anything. So do like that. If what sometimes even if I tell 10 times or 15 times, you might not understand. It is because how I'm telling is not good enough for you to understand. So what you need to do is find out somewhere else who will tell something in different way that you will understand. Because even if I take 10 times, I'll be telling the same thing. Right. Yeah, that's correct. Answer is A. Solo structure. So it's one vertical line of reporting, which is rare nowadays. I'm right. You have a issue with the structures. Do that. What I ask you to do. I think I'm not good enough in explaining it. So please do watch some videos which will teach about the structures. So large financial firms, the compliance function may operate as separate compliance function may operate as separate divisions of each subsidiary within the group. This style of management structure is known as honeycomb matrix, solo structure, or combined structure. But this question is also not. Large financial firm, the compliance function may operate as separate divisions for each subsidiary within the group. It doesn't tell a story actually. There's something wrong with the question. I think what they are trying to ask, because large financial firms are normally using matrix structure, large financial firms, the compliance function may operate as separate divisions. I think the as is wrong here. May operate separately in divisions should be the question. I can see the answer they're expecting is matrix, but this question is not clear. No, it's not clear. It's silo structure as well as matrix structure on this one. I wouldn't blame anyone who selected those two, but not definitely not honeycomb structure kind of thing. But this is matrix structure, silo structure, but I know the answer expected is matrix structure, but it doesn't sound like that. We'll pass that question. Obviously, is this right? Yeah. So only thing internal is this. Social market forces, competitive environment, and technology innovations are external. Only internal thing is that. Correct. No. Right. So which of the following is an element of maintaining independence of the compliance function? How do you make sure that compliance function is independent? So if you take the answer C, the compliance function should informally be linked to the board. It doesn't warrant anything, right? Informally be linked is it's like is that Kelang function? That's not something which we encourage. So it's not something for you to informally go and liaise with the board, which is not the right thing to do in any organization, especially when it comes to compliance and the board. So the D is the head of compliance should be in a place where overall responsibility of managing the firm's compliance risk. So that should be the more matching answer on this one. C, you can't take it an answer because informally linking is not something which you can encourage in every firm, right? Because some firms might have a structure where you can't informally reach, and there's informally reaching cannot ensure anything because either it should be formally reaching or not reaching. So informally reaching will differ. Like let's say I'm the head of compliance today and I will have some informal links with the board, but tomorrow someone else comes into the position and they might not be able to have that informal link because they have, or simply maybe the board doesn't like their face or doesn't know how to deal with board, doesn't understand how to have a conversation with the board level people. So you do not have the informal link. So like that, it is not something definition that they definite that we can do. So therefore it is not keeping independence, it's actually not keeping independence. So I'm sorry, D is the answer for this one. C, having the overall responsibility of that one, so it maintain the independence of compliance function so that it doesn't depend on anyone. So your compliance head will have all the right of telling whether what you're compliant or the regulations or not. And if there's any action that need to be taken, he should be able to warrant the action and recommend the action. Simple. 2 seconds. 2 seconds. I want everyone to answer. You're taking too long. Taking too long. Uh, okay. Risk appetite is also known as, we discussed earlier also, it's similar name to the risk tolerance. Risk appetite is what level, no, appetite is what you like to eat, right? It's what you like to consume, what you like to keep. So that's the level of tolerance that you can take. So that's a risk appetite. That's the level of risk that you would like to accept. So that's risk tolerance level, or the risk appetite is same word. It's not risk aversion. Earlier also we told us risk aversion is avoiding the risk. So if you appetite to eat from uh, what do you call a place or a roadside cart is, if your appetite is there and if you can tolerate that level of risk or something going bad, that you will eat it, right? But not this, if you can't and if you don't want, you will avoid that. You will not uh, eat from there. So that's a risk aversion. You don't want to eat from Petika days because you know that you can't take the risk. You don't have appetite to that. You can't tolerate that. You always eat from whatever certified outlets or home. So that's aversion is you avoid, you don't want to take the risk. Appetite is okay, fine. You take that level of risk and you're okay to have the consequences of it. So risk tolerance and risk appetite are same word. we have to find out principle 6. All right. You can actually carve out the answer through the question also. Four more to answer. Where are the others? Okay. The answer should be Chief Risk Officer, Chair of Remuneration Committee. Nope, that's not what Principle 6 of BIS is principle is talking about. And another one, just please write it down. You need to be familiar with the BIS principles. You might not be able to exactly get the right answer in the exam because you might not be able to remember everything, but you might remember where it was and what it sounds like, what it was talking about, whether that was talking about Chair of Remuneration Committee or whether that Chief Risk Officer. You get my point? So that's the Chief Risk Officer is the one that they will talk about, not the Chairman of the Remuneration Committee. So therefore, it wouldn't talk about Chairman of the Remuneration Committee for sure. It'll talk about Remuneration Committee. So therefore, if you are familiar with the text of principles of BIS, then you'll be able to choose the right answer. What I'm telling is this. Question. You need to read the question properly. How many types of boards that we talking about?
Two,
Yeah. What are the two types that we're talking about?
unitary board and two-tier board.
Yeah, unitary board and dual board, or two-tier board. So sorry, so unitary board and two-tier. So that, and out of that, so have you talked about supervisory board as a type of structure? All right. So we can eliminate that as soon as you see it. So you have a unitary board and the board which comprise of all this the board members, and they will segregate their duties in terms of supervising and running the business. And we discussed about earlier where the two-tier boards are more prominent, and other than that, continental Europe. So other than that, when it comes to US is mainly on unitary board structure. Doing to understand this and remember things. Structures, please do revisit, because it's quite natural that if you don't read the specific one, you will not be able to remember them. The care a reasonable person should take before this we discuss for the third or fourth time now. Can't even take 5 seconds to answer this question. Correct. Okay. It's due diligence, right? So there's nothing, no suspicion on what answer it is because it's for sure. All right, just as you look at, you should be able to answer. All right, answer B. 14 minutes. We discussed this earlier. I want everyone to answer this question. I'm checking memory, not the understanding now. Which we discussed about an hour ago. Where are the answers? Ah, we discussed the exact question. Hmm. So it's quite important to be in the class and discuss our discussions or participate in discussions and remember them. That's the whole purpose of we spending this time here together, because together when we discuss, speak, see the errors and correct them, that's something that we can remember for long term. In which type of management structure is the greatest risk of diluting the accountability of compliance staff? It's matrix structure. So that's what textbook says. And we discussed the same thing earlier also. It's not silo structure. So we need to remember that one. We discussed this few minutes. Yeah, it should be unitary board structure. Please do revisit the structures. I ask you to write it down. And both executive and non-executive sit in the same board is called unitary board. It was the same question. Theory. Correct. All right, correct. Oh, the correct answer is risk register. So that's the official name for it. It's not risk listing. It's about the list of identified risk linked to the business objectives whose success would threaten if the risk materialized is known as the risk register. It's not risk listing. So risk register is official name for it. You need to use that name in your answers. Quick answer. Can take only 5 seconds to answer this. These are the questions that these are actual questions in the exam. You might get, you might not get because it's a randomized. But there are easy questions like this. You need to answer, but please do read the question properly and answer. And read the question, answer, move on. There may be questions where we'll have to spend more time. Are the others in the class actually? See, actually, this is likelihood and impact. I told you earlier also, likelihood score and impact score. It's not number of occurrences because you can't sometimes wait for even single occurrence or even part of occurrence of that. So therefore, it is not a measure. Measure is a likelihood, which is again hypothetically you look at likelihood, and impact is again hypothetically you look at what impact can be. It's a professional judgment. Okay. Now let's see. The bank's management and internal control system can be enhanced and strengthened by strong and independent challenges from board of directors, external auditors, compliance function, internal auditors. Risk management and control systems can be enhanced and strengthened. Compliance. Is it looking at overall risk? No, right? They're looking at compliance risk. So external auditors, we don't depend on them to strengthen the internal systems, right? It's about a fair view of what we are doing. Board of directors and internal auditors. Board of directors, are they expected to, I mean, it's not wrong. The bank's risk management and internal control systems can be enhanced and strengthened by strong and independent challenges. Whose job is to do the challenges out of these two, board of directors or internal auditors? Board of directors' job is not to challenge, it's to give the direction. So the push can be with the internal auditors. It's the internal auditors, if they strong and independent challenges, if they throw in from internal audit, then that can act as a system to enhance and strengthen the internal control systems and the risk management systems. That's how we need to get into this answer. So expected answer on this examiner is internal auditors. Compliance is only looking at compliance risk, so therefore you need to avoid choosing compliance here. And external auditors is not a function that we are depending on. And board of directors is actually to give the direction to you. So the answer is internal auditors. When internal auditors are pushing, internal auditors are keen on looking at the risk management and internal control functions in detail, then that will give you a chance of strengthening the controls, because you know that that's where it is being challenged, or who will challenge you is from there. Especially the internal auditor's function is also to challenge the risk and whether the functionality of the operations. Compliance is actually to ensure that you're moving at the right direction. So the correct answer is independent auditors on this one. Sorry, internal auditors, not independent, internal auditors. Others? Yep, your answer is right. And actually, without spending much time, you can just, if you know the basic, if you're on the basics, just see how I select the answer. I'll just read these answers. Provide international regulators with the template. Uh, Provide international regulators. By the time that I read that part, I wouldn't go for that answer. I wouldn't read even the rest of it. Guide banking supervisors towards adoption. Yeah, fine. Guide banking supervisors adoption of sound corporate governance practices in their own countries. Okay. Guide legislators. I wouldn't read it any further than that. Provide outline legislation. I wouldn't read it any further than that. I'll read the second one once again to see whether that's the right answer. Guide the banking supervisors towards the adoption of sound corporate practices in their own countries. Okay, fine. I'll select that answer. So see, when you know the basics, it's easier to select the answer. And if you don't know the basics, only that you have to spend a long time to answer that question. When your answer is right, it's B. The same question. Yes, the answer is C. The compliance function until auditors and it's already we discussed the same question earlier. All right. So that's we'll stop it there for today. Uh, the take on this is when we do the questions, we realize that whether our answers are right or wrong, and it's not the only thing that we wanted to know here. We need to know what are the things that can go missing, because the exact same questions might not come in your exam. So therefore, we need to know the theory behind the questions and how we are looking at the questions when it comes in the exam paper. For that, we understand that the basics are more important. So when you know the basics, you can derive with the answer even if you don't know the exact answer for the question. And out of that, certain areas that we realize that structures we have to revisit. Please do watch some videos on that and get yourself familiarized with the structures of the board as well as generally the organization structures. So both things, the board structures and organization structures, the functions, matrix structure and silo structure. So you need to go through them and understand them better, because I see large variation of understanding behind that. And now, since that we did the questions, revisions, questions, everything of chapter 5, let's go back from chapter 1 next week, chapter 1 and 3. No, sorry. Yeah. So we will do chapter 1 and chapter 1 first, and then we see, because that has a lot of things to discuss. Huge amount of text is there, so please do read them and get yourself familiarized. And in addition to that, if we can move on to the other chapters, let's jump onto that one and see how we are going to move forward. This is, I don't think we need to spend too much of time on this, too many weeks on this. So now you need to be geared up to do the exam, since that you have had chance of doing the mock exams in the system. Now I think you're pretty much ready, but make sure that the mistakes that you understood today, like trying to read the question too quickly and not reading the punctuations, stops, can make you give a wrong answer. So make sure that those, you won't fall into those pitfalls. It's quite natural to happen, but consciously do something, consciously read it, since that we know what sort of things can make us go wrong. So make sure that that conscious effort is put on when you do the test. And I hope with I didn't have a chat with Shane. I'll ask Shane also whether he wants to take one session of revisions of the two chapters that he has done, and with another 1 day, maximum of 2 days, I think we are done. So you need to book your exams and start doing it, because more time you take from the course to the exam, more you forget. When the knowledge is fresh, it's pretty much easier for you to go and do the exam. So since that we are doing the questions and we are on the form and we are studying and we're trying to do things more with more effort, let's put the same effort and push it through at once, right? So just think of it. And Upeksha just asked Himalaya to send me the scores of the mock exams. So let's try to do some more, and I'm sure that you all will get through the certification without issue. But that's a conscious effort that we all need to put. Let's do that within the next few weeks and push it and finish it within November. So you will have good December holidays with your certification. Right, so with that, let's finish the class for today, and we'll meet up on the next week. Either me or Shane will come in to the class. All right, bye-bye, and enjoy the week.
Thank you.
And watch the rest of the match if it is still there.
Last.